Welcome to The Interest. I'm Katie Jensen. Today we bring you the action with another segment of Cage Match between our own Andrew Berman and Vincent Valvo. Plus, you won't want to miss key insights from Bill Bodnar and Master the Markets. But first, does anyone know what mortgage brokers are eating? Because it seems that a handful of brokerages have grown to a massive scale in recent years, leading the community to create new terms like Mega Broker or even Super Mega Broker. Odds are, if you heard those words being used, it was likely in reference to some of the largest brokerages in the nation, like Nexa, Edge Home Finance, Loan Factory, West Capital Lending, and eMortgage Capital, all of which plan to attend the Originator Connect event in Las Vegas on August 16th for the Mega Broker Brawl Invitational. I recently spoke with some of the Mega Broker owners to discuss what's behind their growth and how would they define the term Mega Broker.
That was just the first time I heard it used. I was a smaller broker at the time, and I saw it on a news article somewhere, and I don't know where, and somebody did the terminology of Mega Broker and mentioned this company called C2, and it caught me because, I don't like to play second fiddle, and so it put C2 on the map for me for the one to go after, right?
Though the Mega Broker owners disagree on a number of points, they agreed that C2 Financial Corporation, boasting over 1,000 loan officers, was the first Mega Broker to emerge. But since then, Nexa Mortgage CEO Mike Cordes has claimed the number one spot with more than 2,000 loan officers. Not far behind are Edge Home Finance Corporation with 1,189 loan officers, and Loan Factory, which recently exceeded 1,000 loan officers. But the burning question on everyone's mind is how were they able to do it?
Well, we're gobbling up all the small brokers now, so it's in a small broker's best interest to join a mega broker for a couple reasons. One, a small broker could never compare with the resources that a mega broker has. Licensing, marketing, relationships, etc.
Owner of eMortgage Capital, Joseph Shalaby, says that rather than hiring talented loan officers, they hire talented teams and smaller broker shops that would do even better with more resources, better pricing, and a bigger brand. That's also how Equity Smart Home Loan CEO Pablo Martinez would define a mega broker. With just under 400 loan officers, he said he's on the cusp of being mega. But as more loan officers flee the retail or small broker shops, Martinez said that he'll keep growing.
We surpassed a level of growth that allows us to offer a lot of things a lot cheaper than someone that is in a smaller shop, right? And we see a lot of loan officers fleeing or leaving smaller shops because when they compare what they're getting to what we have to offer, it's almost no contest, right?
Another burning question from the community might be why nearly all mega brokers use a hybrid or mini correspondent model. And does that mean you're a true broker? Well, opinions on that vary. Founder and CEO of Loan Factory, Tuan Wen, gives his input.
I would think if you send in more than 50% of your loans to the wholesale channel, then I would think that consider a broker, right? You shopping around for your loans. But if you send most of your loan to your own channel, your own mini core channel, you are the lender, then you're not shopping around anymore.
But we're just getting started. Attendees at Originator Connect can hear more on this at the Mega Broker Brawl Invitational August 16th at Planet Hollywood in Vegas. Or read more at nationalmortgageprofessional.com. For The Interest, I'm Katie Jensen.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
friends. Thanks for tuning in to our Master the Market segment. So last week, the Fed's favorite gauge came out, the core PCE on Friday. It came in at 2.6% on an annualized basis, just a touch above expectations. But some of the other numbers within the report were not that great. And when you couple that with just the rash of softer economic news coming in, the markets are now sensing that the Fed is going to cut rates in September. So that brings us to this week. And on Wednesday, we're probably going to find out, will the Fed allude at their meeting that, we're probably going to have to cut rates in September. So we're going to be paying attention to that. But in advance of that, we are going to find out the borrowing needs of the government for the third quarter when the Treasury makes what their announcement is as to how much money they need. And if it comes in higher than what was expected, the bond market could have a tough day. And obviously the opposite is true. And if that were not enough, we go to Friday, we have the Fed's other part of the dual mandate, labor market. We're going to get the jobs report. And if that comes in kind of soft, that's going to kind of breathe life into, hey, maybe we got to really accelerate these rate cuts. Listen, I hope this finds you well. You still have to watch key levels carefully because amidst all this noise, the 10-year note has not been able to get beneath 420. We'll talk to you soon. Have a great week. Bye now.
So, Vince, do you think mortgage professionals should use real estate as a large portion of their retirement vehicle?
Probably. Yeah, I'm not opposed to this idea. I actually think I think it's a good idea. Again, listen, as you know, you're a financial advisor. You've advised a lot of people about this.
Yeah.
A lot of it kind of depends on where you are in your life cycle. But in general, yeah, I think certainly mortgage professionals ought to be looking at real estate as a good place to put their money and to make money with.
Yeah, and there's a generalization, but mortgage professionals, they know good deals. They look at bad deals all the time. They look at good deals. They're going through a lot of transactions. They, generally speaking, know the direction of the market if they're doing a decent amount of business. So yeah, this is, I think, why I've seen a lot of successful originators use real estate as a store of value and also a place to create retirement income.
Okay, and you're right that there are an awful lot of people who are in mortgages that understand real estate. They've been in it for a while. They've paid some attention. I caution, however, I always do, I caution against people sort of hearing this, people in the industry hearing this, and then going, oh, I ought to get into this. Now, listen, just because you happen to know how to put together, a loan application doesn't mean that you are suddenly a real estate seer, right? It does not mean that all of a sudden you have figured out how to buy investment properties and get the most out of them. So
don't disagree at all.
I worry sometimes when people go, I'm in mortgages, I'm good for this, I can get this. Real estate, hey, is a great way to build wealth. You invest poorly, you invest at the wrong time, you haven't done your homework, and all of a sudden it is a great path to poverty as well.
Yeah. The other thing also, of course, in the mortgage industry, if your income is down, it could potentially mean that values might be down at that time too. Like in 2008, saw a lot of mortgage professionals where they had a lot of their assets in real estate, a lot of their wealth in real estate, and their income was down, and also their assets were down at that time too.
And that causes them a problem if they have to bolster their stuff. But this is actually a very good point for me. Thank you very much. Because the reverse of this is right now, where guess what? A lot of real estate professionals, their income is down. Yeah. But the market for real estate and investment properties is up. So you can't say, one thing does one thing and another thing does another. I think it can be great if your income's down to suddenly say, hey, I've got rents. I've got capital being acquired here. That's terrific if you are paying attention to this stuff and manage it correctly, because I think that's the critical thing.
100%.
Yeah. So
know your numbers.
Know your numbers. So on this one here, I think I win. I am absolutely correct. I have said that, real estate is a good investment.
You agreed with me.
And it is.
You agreed with me.
I made the statement. That means that I win.
You agreed with me.
I'm right again as usual.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.